I would like to introduce Megan Llewellyn and Dave Brown, both loan specialists with our USDA Loan Guarantee programs. And I'll pass it off to them to get started.
Thanks, Jordan. It's Dave Brown here, and we see that the magic number for our rural designation for our programs is 50,000 people. The only exception to that would be fresh food establishments, which we'll get to later on in our program. And you can see there's a link included at the bottom of the page that you can actually go in and enter the street address to test for rural eligibility. We're going to actually be going over 5 different programs today on the guaranteed side of the USDA portion. And as you can see from this graphic, that the range in maximum loan amounts ranges from 25 million all the way up to 100 million for community projects. And as you can see by the middle of that page, that 80% is pretty much the given guaranteed percentage for just about all the loans. A rural regulated lender is any lender that is supervised by either a state or federal agency. So any conventional banks or credit unions would automatically be grandfathered into our program. We also have some lenders that are not supervised at either the state or federal level, and we can get those approved internally. As you can see, a borrower is typically eligible, but there are some cases where they're not eligible. And of course, that would be if they're engaged in any kind of illegal activity, or if it's a financial institution or a insurance company. Also, if they maintain any kind of financial interest in the lending entity or financial institution. So the first program that we'll go over is called the Business and Industry Guaranteed Loan Program, commonly called B&I Guaranteed Loan Program. So it's interesting to note in this slide that in addition to for-profit businesses, we also can approve loans to not-for-profit entities as well. There's a wide range of use of proceeds, ranging anywhere from working capital all the way up to term loans for business expansion, real estate, and also machinery and equipment. So we no longer have a test for tangible balance sheet equity. However, there are equity requirements depending on the type of project and also the credit qualifications. The next program we're going to be going over is the Rural Energy for America program, or you can commonly call this the REAP program. And the type of borrowers that will qualify for this program can be either small business establishments as defined per the SBA size standard, or ag producers. And we have to demonstrate that the entity that's the borrower has ownership or control of the site and can be able to contribute at least 25% of the project costs. If the project involves a residence, we have to demonstrate that at least 50% of the energy will be used by either the small business or the ag producer operating the property. The 50% limitation must be demonstrated at the time of application by an appropriate site assessment. An energy efficiency project has to demonstrate an annual savings versus the original equipment being replaced. So any type of equipment that you're putting onto the site obviously has to demonstrate at the time of the application that it's going to be generating more energy than the equipment that's being taken away from the site. And this obviously just demonstrates all the different uses of proceeds for energy efficiency equipment. And the next slide, available funding. You can also see on this slide that in addition to the loan guarantee portion, There can also be a grant portion for up to 25% of the total eligible project cost. And the total combined percentage for the grant and loan can go up to 75% of the total eligible project cost. Okay, so at this point, I'd like to turn the presentation over to Megan Llewellyn.
Thanks, Dave. Good morning, everyone. All right, so I'd like to start off by discussing our community facilities or CF guaranteed loans. This program provides loan guarantees to eligible lenders to develop essential community facilities in rural areas. We have $500 million in CF guaranteed loan funds available nationally during fiscal year 23, and the maximum loan amount for a CF guarantee is $100 million. Under this program, we define essential community facilities as being a public improvement operated on a nonprofit basis, which are needed for the development of the rural community. And I'll discuss eligible projects over the next few slides. Eligible rural areas for CF guarantees are towns with a population of 50,000 or less, and the lender for a CF guarantee can be located anywhere in the United States, rural or non-rural. So for CF guarantees, the borrower must be a public body, an Indian tribe on a federal or a state reservation, a federally recognized tribe, or a nonprofit organization. They'll also need to meet what we call a credit elsewhere test. So the borrower must certify that they're unable to finance the project from their own resources, and they must certify that they cannot obtain commercial credit at reasonable rates and terms. And the applicant also must certify and provide evidence of significant community support for the project. So this last bullet point is very important. The applicant must have the support of the community in which the project is located. We often see this in the form of letters or videos, letters of support from folks in the community. All right, now on to eligible projects. So funds for CF projects can be used to construct, enlarge, extend, or otherwise improve essential community facilities. And it's important to note that the CF program will only finance projects which will be for public use. And the term facility in this context refers to both the physical structure being financed and the resulting service provided to rural residents and rural businesses. So eligible facilities can include courthouses, community centers, libraries, police stations, schools, public transportation, things of that nature. So next I'll discuss our water and waste disposal program. And this program aims to provide affordable financing to qualified borrowers to improve access to clean, reliable water and sewer disposal systems for households and for businesses in rural areas. $50 million is available nationally during fiscal year 23 for our water and waste disposal guarantees. And similar to community facilities, eligible areas for water and waste disposal are those with populations of 50,000 or less. And the lender likewise can be located anywhere in the United States. So borrowers for the water and waste disposal program must be public bodies, federally recognized tribes, or nonprofit businesses. And they also must have the legal authority to carry out the proposed project and provide the services that they're proposing to provide. And in a similar vein to CF guarantees, borrowers for our water and waste disposal program must certify that they can't obtain credit elsewhere at reasonable rates and terms. And there must also be evidence of significant community support. So funds for water and waste disposal projects can be used to construct or improve facilities for drinking water, sanitary sewers, solid waste disposal, and stormwater disposal facilities. And depending on the circumstances of the loan, some funds can also be used for guaranteed and lender fees, land acquisition, operating expenses, and the purchase of existing facilities to improve or prevent loss of service. And it's also important to note that for water and waste disposal guarantees, the project must be for a public purpose. And so next, I'd like to discuss the Food Supply Chain Guaranteed Loan Program. The Food Supply Chain Guarantees are a new program that launched last year, and they're part of the USDA's Build Back Better initiative. So the Food Supply Chain Guarantees provide financial support to lenders whose applicants are looking to start or expand middle of the food supply chain activities, such as aggregation, processing, manufacturing, the storage, transportation, or wholesale distribution of food. The maximum loan amount for a single loan under this program is $40 million. And the purpose of this program is to increase the capacity of the U.S. food supply chain. So about $1 billion are available in loan guarantees under this program, 19% of which are reserved for meat and poultry slaughter and processing. There is an emphasis on meat and poultry, but it's not a requirement for this loan. And the FSC provides financial support for lenders whose loan applicants are looking to start or expand those middle of the food supply chain activities. So bars for this program, it's fairly comprehensive. They can be for-profit or nonprofit businesses, cooperatives, federally recognized tribes, public bodies, or food supply chain entrepreneurs. And they must be engaged in or proposing to engage in those middle of the food supply chain activities. Private entity bars also must demonstrate that loan funds will remain in the United States and that loan funds will increase the capacity specifically of the U.S. food supply chain. So anything from post-harvest to the distribution of food is eligible for this program. As I stated before, there is an emphasis on meat and poultry, but note that the program isn't limited to meat and poultry. Eligible uses of funds under the food supply chain will include business enlargement, repair, modernization, the purchase and development of land or infrastructure, educational, innovation, and training facilities, and the purchase of machinery and equipment. So it's important to note that there are no geographic restrictions to food supply chain guarantees. Both rural and non-rural areas are eligible for this program. There are also no guarantee or annual fees associated with food supply chain guarantees. Now, an important distinction to make with food supply chain guarantees is that only middle of the food supply chain activities are eligible. So agricultural production isn't eligible, and the retail consumer end is also not eligible. So when looking at eligible projects under this program, think about being on a highway where the left guardrail is agricultural production. The right guardrail is the retail consumer end. So everything in between those two guardrails is eligible for this program, but you don't want to hit either end. You want to stay right in the middle. So this concludes rural development's portion of this morning's webinar. We've listed our contact information for any questions you may have. And for now, I will pass the microphone over to Dan Horowitz of the SBA. Thanks, everyone.
Good morning and welcome to the SBA session of the portion of the program. For those of you who don't know, I am Dan Horowitz. I am the Lender Relations Specialist from the Rhode Island District Office of the SBA. I'm joined by two of my colleagues, John Shue of the Connecticut office and Carlos Hernandez of the Massachusetts District offices. We're going to cover the SBA loan programs and how it's advantage, what's the advantage for lenders and how it allows them to expand the portfolio with minimizing the risk. Just as with the USDA loan programs, the SBA loan programs are loan guarantee programs. So there's a difference, of course, between the various topics that were covered today, conventional versus SBA lending, the benefits of SBA lending, and my colleagues have covered things like the tools for lenders and some takeaways as well. All right, so conventional versus SBA lending, pretty simple. In conventional lending, you know this better than I do. The primary goal is to turn a profit. Typically, you minimize your risk by lending to established businesses with stable cash flows, proven financials, everything that goes forward. But this also tends to mean that a lot of small businesses, a lot of entrepreneurs have trouble obtaining commercial conventional loans. If you're not lending to small businesses, you're missing out on a big opportunity. We all know this, and that's the purpose of the SBA. Now, if you want to ask how big, gosh, that's an interesting question. All right, so we have a new tool on the SBA that's available on the link that will be in the deck that you'll be supplied with. But I like actually just getting to the hard numbers, and it's really interesting. Now, during COVID, I know many of you knew, understood, and watched SBA. We worked with you to do PPP lending, and then we also did the economic injury disaster loan. We went from being a small portion of the overall commercial loan portfolio nationwide to, honestly, at the peak of SBA's disaster loan programs, we were basically the number 2 commercial lender in the country by size of portfolio. Now, I'm sure that tide mark, a high tide mark, has ebbed down a little bit. I'm sure we're still one of the top lenders nationwide. And just in FY23, nationally, how big of an opportunity you're missing if you're not doing SBA lending? Well, just thus far, not even through the second quarter, That's over 19,000 loans have been made nationwide. That's over 9 billion with a B. Average loan is roughly about $490,000. So there is quite a bit of opportunity there, and these are not all small loans. In Rhode Island, it's just been 72 loans, but that's been for more than 30 million. Connecticut, 246 loans for more than 90 million. And in Massachusetts, just in FY 2023, 457 loans for more than 145 million. Now, that's the 7A and 504 loan programs. It doesn't get into the microloan programs, but that's a lot of lending. If you're not participating in SBA loan programs, that you're missing out on. Now, that goes, of course, to the next question. What does that mean? What are SBA loans? What are we trying to do? Where does the SBA guarantee loan fit? And this is the next little ideogram we like using. Sometimes when I talk to lenders who aren't aware of SBA loans, I like making it a little bit more simpler. There's a difference between prime and subprime, black and in red. And there's a line between the two. That line separating the prime versus subprime, that is this green area. That is SBA loans. Now, SBA doesn't want to guarantee loans, just as my colleagues from the USDA said earlier. We don't want to guarantee loans to businesses that can obtain financing elsewhere. In other words, conventional lending. We want to lend, we want to support loans that you make to those businesses who cannot obtain commercial financing elsewhere, so alternative credit. However, no lenders want to make loans to businesses that aren't viable, i.e. typically in the no range. Now, the SBA provides support for those businesses that don't qualify for conventional loans. We work through you, the lenders. Now, common examples of what would drive you, the lender, to loan to businesses that and use an SBA loan. Whether the owner is short on collateral, they don't have enough equity, insufficient equity, they're a startup, they've been in business for 18 months or less, typically, hard to obtain a commercial loan. And again, this may seem to be a narrow slice of the overall funds, but it's a lot. It's an awful lot. And it's a great opportunity to reach out to new businesses. Now, how does SBA, what do we say? What's our role? We don't get in between you and the client. Business needs capital. They go to a bank or credit union, you provide the loan. And the cases where the opportunity is that you want to supply them the financing, but there is too much risk for any of those topics, the SBA underwrites. We guarantee the loan. And we like to call it as a sort of insurer of sorts. We reduce the credit risk for you, the lender. We mitigate the loss possibilities, and we actually provide additional services to the borrower through our partners. Doing multiple things at once is always fun, isn't it? Leveraging the SBA guarantee, how does it help you? Well, again, we reduce the risk. SBA minimizes that risk. We provide participating lenders with a guarantee for anywhere from 50 to 90%, depending on the loan program. And because small businesses create 2 out of every 3 net new private sector jobs, you're expanding your footprint in your community. You're providing entrepreneurs and local small businesses with capital. Now, it's SBA guaranteed loans. That doesn't matter then. You are providing the capital. We're mitigating the risk, but it's one of the benefits of lending to a small business that's early in its development. It matures, it outgrows the need for SBA guaranteed loan, whether it's a refinance, whether it's a next loan in the life of the business. The primary lending relationship is yours. You make the loan, you service the loan. We provide the guarantee, we mitigate the risk, but you are the one providing the nest egg, the opportunity for that entrepreneur. Now, there's always increased cash flow that comes from having an SBA guaranteed loan that provides and offsets all that risk you had elsewhere. Pretty simple. What are the lender types? Well, you know who you are: conventional loans, lenders, credit unions, banks. We also utilize and work with non-bank lenders and mission-based community lenders, whether they're CDCs, certified development companies, community advantage lenders, and microloan lenders. These are topics my colleagues will cover later on, but they're opportunities. And real quick to go back to that that no range. When SBA talks about our perfect loans, the SBA range, there are some there are some borrowers that are in no range. They have a great opportunity. That's when you partner with the CDCs or the community advance lenders, with the micro lenders. They will turn a no into a maybe, as my colleague Carlos is going to cover.
Thank you, Dan, and good morning, everyone. My name is Carlos Hernandez, and I'm a lending relations specialist here out of the Massachusetts District Office, a team of 2 right now, and we're helping support local lenders like yourself to help administer and promote these SBA programs. So let's just say the last few slides, you've been intrigued of what Dan Horowitz has been saying. You want to increase maybe your loan portfolio at your institution, or maybe learn about other programs available through the SBA community. Well, the next few slides here, I will give you a quick overview of those. So we pulled back that curtain and we take a look at these these loan programs more closely. You'll find one that, probably best relates to you and your small business customers. So right here, SBA loan programs. SBA is probably primarily known for that one right in the middle, the 7A loan program, but there are other programs that are just as important that are out there that help small business access capital. And that is the 504 loan program, which is an economic development program, and the Microloan Program as well. So if you look at 7A, you hear this all the time, right? SBA commercial loans, small business loans. What exactly does that mean? Because even that has sub-programs below it. And we're talking about the community advantage loan and international trade loans. But don't worry, we're going to cover each one for you here with these next few slides. All right, 7A loan program, creme de la creme right here at the SBA. It's one that's widely known because there's more institutions every day that are participating in this program. If we take a quick look at the snapshot that Dan provided, you're going to notice your institution probably has done a 7A loan either this year or the past few years, right? The 7A is all encompassing. It talks about, this equals our 7A loan program, our over 350, our 7A small loan, SBA Express, our international trade loan programs. All that falls under 7A umbrella. One of the good reasons, or one of the best reasons, it's you can use it for all kinds of uses, everything from inventory, real estate, working capital, debt refi. It's very flexible for both the institution and the small business borrower. You have their federally guaranteed programs, which is one of the biggest reasons why someone would choose to go SBA, right? For the lender's piece, it's guaranteed up to a certain amount, up to $5 million. It's got competitive loan terms there. You're able to have extend wider maturities, longer depending on the sources that are using it for. Also, too, you can charge a competitive rate to your small business customers. You can either get a term loan or revolving line of credit depending on the program that you're using, and also as a strong secondary market. Market out there, and you can potentially qualify for some CRA credits under this program. So it's really, very highly efficient, and it's one that we're finding a lot of lenders that haven't dipped their toes into the 7A program are now reaching out and saying, hey, we got new staff, we got new strategies. Can we take a look at this program for our institution? So in that piece too, though, a lot of times you have different, depending on here, we're in the Northeast. This is a good example where you probably have some either small business customers or someone in your portfolio that are now looking to enter international waters, either Canada or looking to go overseas to Asia, Europe, South America. Maybe perhaps they have someone in their supply chain now that is overseas, or maybe just looking to enter that market. They notice with the shift in the change of the economy, they're having more customers from overseas. This is a really good opportunity now to get into the international trade loan market because, a bank, you're probably going to want a higher guarantee because there's some uncertainty there, right? It's a different market space, and you're able to now help that small business customer expand globally. So there are different programs specifically for small business exporters that provide the bank, more opportunity with a higher guarantee and more flexibility with different types of programs, the way it's set up. Like we have international trade loan programs, we have an export working capital program, and Export Express. Each is unique to its own delivery, but it does offer you the opportunity now to provide different financing options to a small business exporter. And one of the key features of the international trade market is we have someone here that's dedicated specifically to New England small business exporters. So if you do have a customer or client that you want to talk about this, we can put you in contact. His name's Joe Raycraft. He sits out of the Hartford, Connecticut office, but he covers all of New England. So I think that's, really unique, and is someone that can help you and get on a call with not only you as the loan officer, but with the small business. So together you can help find what's the best financing need. So that's a little bit unique, little bit added benefit compared to, the district office. Community Advantage. So Community Advantage, now you probably heard this more in the news lately if you be following, SBA news. I don't know what website you be following, but there's a few different ones out there that cover, what's going on in Washington and different access to capital programs that are coming online. And Community Advantage is one that has received a lot of attention recently because there have been new program, updated guidelines and requirements that makes it more readily available for a community advantage lender to lend to the small business underserved markets. So this is a little bit different, right? So that instead of a traditional 7A lender like your commercial banks or community banks, these are more originated and serviced by admission-based lenders. So I know here in Massachusetts we have a few under our CDCs, also through our micro lenders. So it's a bit different, right? It offers the borrower there to work hand in hand with someone who's not a traditional lender, but they can also offer them not only support but technical assistance throughout the life of the relationship. This community advantage lender receives loan guarantees up to 90%, and they also can sell these guarantees on the secondary market. Veterans Advantage. Now this previously, prior to this year, this would have been a really good incentive, but it's pretty much, I guess, zeroed out this year because of the guarantee fee incentives that are in place right now. But for, just let's say at fiscal year 2024, the guarantee fees either go away or are lowered. I'm not saying they are, just for hypothetically speaking here. This is where the Veterans Advantage really shines, right? Because in normal lending cycles, right, there is normally a guarantee that's charged to the small business borrower. So if you're new to the SBA lending space, the borrower comes to the bank, they apply for the loan. The lender will review the application, go through their application process. They will then submit to SBA the loan application request. There's normally a guarantee fee that the SBA charges to that small business customer, right? And that depends on the loan amount and different percentages, for that loan request. The lender then takes that loan payment and submits it to the SBA, or that guarantee fee payment submits it to the SBA. However, under Veterans Advantage during a normal lending cycle, that guarantee fee is waived for certain programs up to a certain dollar amount. But this year, since all loans 7A to any small business owner, veteran or non-veteran, is waived for any loan up to $500,000, then it pretty much washes this guarantee fee. But it's going to be something that be on the lookout for, because it not only applies to the veteran but any spouse of a veteran. So it's a good program once it comes back live and say the guarantee fees are reduced or taken away. So the 504 loan program. So this is right here. This is where the left hand meets the right hand when it comes to the SBA program, because they go hand in hand with each other. Right? They build a strong combination when it comes to helping your small business access different markets and loan programs. So with the 504 loan program, it's a 3-person party, right? So you'd have your small business borrower comes to you through your doors and say, hey, I'm looking to purchase some commercial real estate. You as a third-party lender say, that's great. We want to take this opportunity on, but I really don't know about the 7A program, right? I know you guys just covered it. I don't know much about that, but I am interested in the 504 piece, because for the bank, they are in a unique opportunity here because they get a first lien position on the real estate, but the SBA through the CDC gets a second, right? So that's great news for a bank. So what they'll do is then they'll partner with the CDC. So what the CDC does, they work hand in hand with the lender to get this document or this loan request approved. So imagine as a 7A lender, you, the lender, will work, in the bank individually to get this loan request, all the paperwork, all the documentation, the approval, the loan authorization. It's all but done by the lender. On the 504 side of the house, you're doing that together with the CDC. right? They are taking the lead on getting that documentation to the SBA and approved. So you're talking about seasoned lenders here that are helping you through this process to get the loan to the closing table. So it's a really, really good opportunity for you if you haven't had much SBA experience to contact a CDC. Think of them as your partner, someone that you can help customers. So I know throughout New England, there are some that serve the entire region. There are some that serve just, specific states. But, for a small business customer, they can start with either, right? They can go to their local bank, say, I'm interested in purchasing commercial real estate here. I hear the 504 loan program is great because for a small business borrower, I'm able to purchase and get in with as little as 10% down, right? That's right? Even in these, markets right here, 10% is pretty, significant savings to them, given the high prices you're finding today. So good opportunity. And then the CDC, the SBA piece, they're able to now get this project for this small business customer. So it's really, really good opportunity. It's a 5-40-10 split, which means, the third party lender finances 50%, the SBA through the CDC finances 40%, and then the small business customer comes in with 10%. Yes, there's a few exceptions, but I think just the general playing field for today's purposes, it really is, that 10%, that you will see as a common transaction. Microloan program, right? So you think, you say you have customers that walking through your door today, they're not looking for, $500,000 $1 million, small business loan. They're looking for something small, looking to start their business. Maybe I just need a high capacity printer, or maybe I just need some tables and chairs to start my service business. I'm looking for, $2,000, $5,000, $10,000, $25,000. Nothing that's, not a big loan here. So for you as a bank, maybe that doesn't fit your requirements or your minimums. But, that's not a reason to say, we can't help you. This is really a good opportunity for you now to then turn that borrower to one of our microloan lenders, because what they do is they also provide technical assistance on top of financial assistance to these small business customers, right? Up to $50,000. These rates, they may be a little bit higher than what you'll normally see, but, it's because a lot of times too, you're coming to someone who may be a startup, maybe who had a hiccup in their credit in the past few years, something that they're not bankable just yet, but they're, this is where you start and plant the seeds, right? They come out to this micro lender, they get some financing, they start growing, come back second, third, fourth year. They've grown to a point where now they're looking to establish that commercial relationship with you. So it's a really, really good. We've seen all kinds of success stories with small business starts out, with just a small microloan, $5,000, $10,000, and grows it to be a successful business. So really get the opportunity to reach out to your local SBA micro lender to find out, who that loan officer is, how are they handling referrals, and how can you get in contact with them to, help your small business instead of saying no to them. So really good opportunity for you. And if you are a micro lender, you are still eligible to use SBA Lender Match. If you haven't heard about that tool, it's a tool where if, let's just say, a prospective customer today wakes up and say, hey, I need to find an SBA lender, right? I hear about these programs. I see it in the news. How do I find an SBA lender, right? They can call us. They can go to our website. We're all going to point them, right? I think the whole agency has taken the initiative to say, hey, point them to Lender Match, right? This is the tool why it was created. It's for a small business customer who's looking to connect with an SBA lender. It's a free lead generating tool for you, and for the small business customer, it puts them in front of you because they're able to go create a profile, add some, information about what they're looking financing for, a little bit about the business. They submit it to you. It's almost like a friend request, right? You receive a thing, if you set up your own parameters, and if it fits those parameters, you get a request from them to say, hey, this small business is looking for financing. Are you interested? So that's available to any 7A lender, third-party lender, Microloan Program, Community Advantage lender. So another opportunity for you to find some potential deals. We can go to the next slide. And some benefits of SBA lending. So I believe I have, 1 or 2 slides left here before I pass it over to my counterpart there. But, for conventional lenders, as Dan mentioned earlier, right, it allows you the ability now to, take on a little bit more risk, right? Open up to different industries that you don't typically lend to. Maybe with that guarantee, you're able now to offer, instead of requiring 2 years of tax returns, you can, look at startups, right? You can also potentially qualify for some credit reinvestment acts, some CRAs. You can develop future non-SBA borrowers, right? You can, through one of these programs, help them out. They come back to you once they're, grown, they're looking ready to, grow their relationship with you, or maybe, they just, open some type of commercial deposit account with you, or some services, banking services, because you help them out through this process. And also too, you can also sell it on the secondary market right now. I'm sure there's, different opportunities out there if you're looking to, build some interest income for the bank. And the next slide. And, there is some benefits for a credit union, for any credit unions that are on today. SBA small dollar loans do not count against the business loan cap for a credit union. So that's, good opportunity for you there to now consider that and, provide some risk reduction for your portfolios. And again, look at that secondary market bullet again, right? It's a opportunity for you to sell those guaranteed portions on the secondary market. So a lot of good opportunity here. I know came a little bit fast at you, but if you follow different district offices, they're put in more comprehensive trainings. But for you here, hopefully you take a little bite size back to your banking team, or maybe yourself or your leadership, and say, hey, there's all these opportunities. Let's take a closer look at one of them. So with that, hopefully this was helpful, and I'll pass it over to John Shu.
Thank you, Carlos, and also thank you, Dan. And this is John Shu from SBA Connect District Office. I will be, the person to complete the last part of our SBA team presentation. Well, let's talk about the first benefits. Excuse me. The benefits for the mission-based lenders, to be an SBA lender. First, it will align with your organizational goals to meet the needs of the CRA, just Carlos mentioned. Also meet the needs of your customers in underserved communities. Of course, that will promote economic growth, including the tax revenue for the community, and also the lender can apply for SBA technical assistance grants to really help to turn around the local economy in underserved market. More benefits for the community advantage lenders. SBA has over dozens of different programs, so we're particularly talking about the community advantage program. Now, it meets your mission while mitigating the risks. It's always a risk involved when you lend to the businesses, and also you can access to secondary market, to sell the SBA guaranteed portion of the SBA loan, which will really improve your cash flow for a small community lender, especially your limited working capital. So that's perfect. You can sell the guaranteed portion of the SBA loan you approved on the secondary market. And also, another last benefit as mentioned in this slide is the access to SBA's lender match platform for free leads. Next slide. Okay, benefits for the borrowers. It's kind of a win-win situation, not only for the lenders, also for the borrowers. Borrowers can use the SBA loan to get reasonable, loan terms, for whichever they may not be qualified on the lender's conventional loan programs. You may, inject small equity, into the loan. Many of the other lenders, lenders for conventional loans may require more cash or equity injection, while SBA probably is 10 to 20%. And also you can, get a longer payment terms, with a low monthly payment. The loan could be from 1 year to up to 25 years, depending on which loan program you are using. Benefits for the community, of course, once the small businesses are growing with SBA loans, that can create more jobs and also generate more taxes. So just be mindful that all the government programs about tax, also job creation. So this is perfect SBA loan program for the local community. SBA has these two very powerful tools for the participating lenders, how to help you really how to do SBA loans. The first one is E-Trend. The second one is lender match. Let's talk about that. E-Trend is the SBA primary loan guarantee origination and servicing system, where the lender can integrate with your existing software and securely store SBA loan information, provides increased efficiency while decreasing operating costs. Lender match. We heard from lenders that they could not find any eligible borrowers. From borrower side, we heard they could not find any eligible lenders, basically the banks. So SBA create this platform called Lender Match, similar to the eHarmony. We will get you matched. So currently there are over 800 lenders across the nation participating in the SBA Lender Match. It's a free program, and no cost to you. You just sign in, create your own account. Both lenders and borrowers can answer about 20 questions. The borrowers can submit those questions and get matched with potential lenders. And lender also can select their referral search criteria to better target the customers to meet their lending requirements. For instance, they can select the states, the revenue, the loan amount, and also the industries. So it's quite a flexible program for the lenders to really select what they are looking for. Key takeaways from this presentation. Okay, these are the remarkable key takeaways from this presentation. SBA lending will reduce the lender's risk, expand lender's loan volume, and raise your profile in the community. Also, it counts towards your CRA credit. Definitely increase your cash flow because you can sell guarantee portion of the SBA loan on the secondary market. Put it back to Dan and Carlos. Thank you. Okay, here's the contact information, of SB staff here. If you have any question, please feel free to contact us in the tri-state here from Rhode Island, Massachusetts, and Connecticut.
I'd just like to thank everybody for showing up today, and obviously you have all of our personal information and contact data, so please don't hesitate, should a project arise or anything that you think might need some credit enhancement, to reach out to either team, the USDA or the SBA, and we'll gladly take your questions and comments and get back to you. Thank you.
Real quick, I'm looking forward. I've already actually gotten 2 emails from people about the food supply chain program. Really looking forward to giving out some more information about that. So if you want to send me a quick email so I can distribute it to people as well, they just have some questions about exactly where within the, between your example between the guardrails is fantastic, but of course that was in the details. Some people are going to want to know more about that. It really is an opportunity, especially for, say, food incubators and people like that. Seems like an interesting opportunity for those people.
So I'd like to thank everyone who attended for listening, and thank you so much to the presenters to share this useful information.